Welcome to the 4-minute morning for today, which is Friday, that of the 6th day of April 2018. And everything you do is within your own risk, own reward. Let's start off with gold against the US dollar. And since it started rallying from the December 12th lows to the January 25th highs, it has stayed in a sideways range. 3 times hit support at a little over the 1300 handle, and 3 times resistance between 1355 and 1365. And it's just hanging in there within the 18 average, chopping a little above and below it. Let's take a look at gold now next. Same time frame, the daily, against the Canadian dollar next. And it's quite different, really. Well, from its December 12th lows to its March 25th highs, it had several times where the lower end of the 18 average was tremendous support. 18 average of highs was not resistance. It broke through it frequently with new legs, making higher highs on several occasions. But trend line, it's broken. I don't have to draw one in. I will anyway, but it's obviously broken. As we can see it there, support hit a few times and it's broken below it. The price is obviously falling below the 18. I'm going to think Fibonacci. I'm going to look back to see if there's more data. And quite frankly, I do have a hard time using these 5094 lows when I know there were lows back in July of last year. Let's take a look at this on a longer term time frame, however. And within such on a 12-day time frame from 2009 all the way up to 2011, the price went up. A little bit of sideways consolidation within it, one leg lower only, and since then has been trading in that of an uptrend. The lines will be different again with the US chart for resistance base, but let's take a look at the same time frame against the US dollar now. And again, the pattern is much different, as it had 2 decent legs lower, with the first one in 2012 and then another one to the 2015 lows. It has had a sideways consolidation, and it is hugging or spending a lot of time right now with the upper level. When looking at the Canadian dollar and on a 40-day time frame, this earlier part represents my high school days. But the volatility, this thing goes from 88% of the US dollar down to 60% in 2002. Big, large move up, greater than par. And then this fast move down to 77, fast move back up to go greater than par. But none of these key support areas did very well. 88 area had small support, really no support around the 84-ish area, which really wasn't. And even previous low had very low support. It has resisted it once, but it's supporting that area now as the 18 average is flattened and maybe starting to rise and go higher. Looking at this on a monthly chart, this is what I've been using to indicate how silver and gold do very much working within this, that if this can break out, don't be surprised if gold and silver prices rise higher. And finally, we'll look at the US dollar. We'll look at cryptos later today. Today is crypto day, but not for this video. And with the rise in 2015, this is a key Fibonacci level. I can't remember exactly how it was calculated. This, I remember, was a Fibonacci downside target level, which has hit price action still a little bit below the 18. When I see a pattern like this, I would usually expect it to come up to 92.45 and then find resistance. But if it doesn't, that's just as weak, if not a bit weaker, because breaking down below 89.23 area, I wouldn't be surprised if it has some quick moves, maybe even down to about 83 to 84, or a high 83s to 84. Okay, thank you for tuning in and have yourself a great day. Bye-bye.